Hey guys, Kathy Iconis, ready to kick off this fifth session, and we're going to do it this time. I know last time we had some technical difficulties with my internet, and then same day Twitter went down. So who knows what was going on with the Earth that day, but it was not working. So we are going to move ahead and get through session 5 today. Now, I know you can see on here that I have session 4 up. That's because where we left off last week was we got most of the way through work papers, but I told you I intentionally know that this will carry over into the fifth session. So I am picking up where I left off there so that we're not missing anything. Okay. So you guys let me know. Let's see. I'm looking at this. I need to share my screen. There we go. That's number 1, right? We got to get that in there so you can see what I'm talking about. Awesome. Okay. The other thing I really hate to warn you, but I have a new kitten. She has been a pain in the butt recently, like getting all in everything while I'm working. I usually lock her up, but she just came down and is eating in the other room, and so I feel kind of bad. I can't lock her up there, so I feel bad. So fingers crossed she just goes right back to not annoying me while I'm working. So hopefully that there's no interruption there. Okay, so let's kick it off. Let's get into everything. I don't see that I have any questions or any issues going on with the broadcast, so I think we are good to go. I have confirmed that we are recording and that you can see my screen. So I think we are ready to kick it off. Okay, so where we left off last time was accrued expenses. And let me they're very, very similar to prepaid expenses. Great, but the opposite. So what we talked about last time was prepaid expenses, something that we pay in advance and we want to expense it over time in the future. Okay, so we create a work paper to track when we actually paid it, what time period it covers, and how we're going to expense it. And then that work paper will tie to the ending balances on the balance sheet each month going forward, okay? So accrued expenses is the reverse of this. We want to record the expense in the period, but we haven't paid for it yet. Payroll is usually my number one example of this, but and everything associated with payroll. But there are other instances of that. I'm just going to go through payroll as the example so that you guys can really see what's going on here. So what we're doing is we're trying to match up expenses that are actually incurred that period to the revenue that's incurred that period, right? And this is all accrual-based accounting. And with that, we need to make sure that in the payroll instance, the expenses for May or June, whatever month we're talking about, is in June, while we pay payroll after the fact, right? Most of the time. If you're not, then your payroll schedules are a little wacky and you're probably in hell all of the time if you're if you're not paying after the fact. So the actual cash comes out at a certain period of time, but it's for the payroll period before then, the dates before then. So if you have, say you're paying out payroll at the second half of the month, that probably might not be booked until maybe the 5th of the new month. So we need to pull this back into the month that we're working on for month end. Now, again, these are all calculations, they're estimates, and with accruals, there's this possibility that we are making an estimate of something that we're not sure of yet, and we could be wrong, right? So when we are calculating accrued expenses, we have to account for the possibility that we were wrong on something in the past, and we need to make that adjustment to correct it. So there are two parts to doing this accrual work paper. And I have this set up, and I try to explain it a little bit more on this front sheet. And then I'm going to show you this example of this work paper that is like long drawn out. You might not need this much, but I wanted to also show you an example of a work paper that's not just one sheet, that we could be doing a lot of calculations on a lot of different tabs that then are summarized to one page, and we deal with things there. Because we can do a lot in Excel that will help us streamline all these processes and these calculations of things. But let's get to the core of accrued payroll. So here, what is the expense that should be reported for the period based on our best estimate? So the 9/10 payroll was actually for 8/15 to 8/30, right? Then we need to accrue the 9/10 payroll. We need to make it show up, make a journal entry, make it show up in August. Alternatively, maybe if that payroll is just a journal entry on 9/10, you just change the journal entry date to 8/31, and then you get it in the right period. So maybe with that, in those instances, you usually know what the amount is. But if we are unsure of amount, if we're just putting in this accrual and saying we need to accrue for this and our best estimate is it is this amount. So after we do our first accrual, when we get into the next period, the first thing we want to do is, were we right in August? Was that a correct amount? And if we're not, then we need to make an adjustment to the expenses in the current period so that our net expenses are correct, okay? Because what happens is we made that adjustment in August based on our best estimates. And then when reality came and hit, we were like, oh, we were wrong by $5 or whatever it is. We're going to make that adjustment here, okay? And then once you fix that, you go into the accrual for, moving forward. Okay. So within one period, you will have an adjustment from any corrections in prior periods and the accrual based on what you're projecting you'll actually spend out in the future, but covers the current period. Clear as mud, maybe? So I'm trying to show this a couple different ways in here. Here we have August. Our reality is $50,000, or what we put is $50,000. Reality is $55,000. Once we know of the difference, it's $5,000 adjustment. Okay, and we're putting that into September. Now, it all depends on when you actually like hard close the books. If you are able to make adjustments to prior months, then you can probably go ahead and do that. But since we're going to the point of doing accruals monthly here, it's quite possible you can't change the prior months. And in those instances, we just need to make the adjustment in the current period once we know of the change. Okay, so that's where it's happening. So think of that as two parts to this accrual thing. So the way I have done this in the past is I start out with raw data from the payroll provider, because my example, the payroll provider did not integrate with QuickBooks Online. So I just got raw data. In this spreadsheet that I had set up, I could copy and save over into the next period, save over to the next period. And all I do each time is paste in the new raw data into this payroll sheet. Okay. So then all of my formulas and everything moving forward in these other tabs just update, and it makes it really easy for me to make this calculation and look at it and fix everything. So Oh, those are reimbursements. Some of regular earnings, and some of reimbursements. Okay. The other thing I do, we'll ignore that sheet 2 for now. The other thing I do is I export the detail from QBO. This is because I need to know what payroll should be, but I also need to know what has been paid so that I can verify that I actually need to accrue it. If it's already been paid, that, like, and the expense is showing up in the right period, then I don't need to accrue for it. Or when I actually have the real expense come in the month later, I need to fix it or, match it up to the prior accrual and make sure that it is correct. So I put all the detail for the month in there. So I have this data dump from the payroll provider, data dump from QBO, and then here I start creating pivot tables off of things. They're really easy to do. I just put up an on-demand training on Excel and it has pivot tables in there. But the point being is it just summarizes your data in the way that you want it to. So I have a summary sheet for wages. It is pulling all of this information off of this tab in the fields that I want and everything, and it's giving me a summary of those wages, right? Then I have summary of what vision is. So right here I have the employee's deduction for insurance vision and the employer's matching or contribution for vision right there. Okay. Health savings account, life. I've broken this down because there are so many things within this payroll that I needed to have like those segments so I could look at those individually instead of everything all together. Again, you've seen me do that. You break things down into bite-sized areas. Payroll's a big thing. And if there's a lot of stuff going on, let's break it down. Okay, and let's look at those pieces and take care of those piece by piece versus just trying to wrap your head around this huge thing every month. I mean, this is the part with accruals and prepaids and deferrals, all this stuff makes my head hurt because there's so many moving pieces and it's a matter of, okay, how can I organize this so it's very easy for me to pick up, review quickly, move on, right? This is not something that I want to relearn every month. I just want my steps in place so I can process it, get it done, and move on, so that I could just get through month end, right? Okay, so in here, this is just a summary of the information I have on these other tabs. I do come here, I have the beginning balance. This would be the same as the ending balance before. So if I wanted to roll forward this, I could just copy this and put in, the actual values over here. So I could copy and paste or just key it in like 10.824.1, that's 13, right? That was the same as that one. Okay. I'm going to undo that, but I just put in, so I have my beginning balance that I'm tracking, right? And then what are my additions? So in this instance, all of the payroll information that has come off of my payroll tab, my source data from the payroll provider. Okay, what all stuff do we add in here? Okay, and then what stuff do we remove? The payments that we've actually made. So in this instance, this is a 401k. I'm coming in and I'm adding in the actual 401k payments, right? Because I want to take that out of my accrual. And then I have an ending balance, right? My ending balance, I compare that to what I believe it should be. Now, here's the difference with accruals. You are either going to know for sure what that amount should be or you don't, okay? In a 401k instance, I can know based off of here, like, hey, it should be, I have April 16th, okay, sorry. It should be this last period because it was reported in this and blah, 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 blah. This is what the accrual should be, okay? So I have that as a check of it should be that. And then I'm posting what the difference is. Now, you see that there's a difference. This is where something I probably need to investigate. Why is there a $700 difference? Someone's kind of big, right? Do I need to make some sort of journal entry adjustment right here? So do I put in 7827? Okay, negative 78, right? Once I get an understanding of what that is, and then I have to create the journal entry for that below here, maybe that's something I need to do. But we have this, you can see what I'm doing is this ending balance then ties back to the balance sheet. Remember, this is so important. Our numbers need to tie to the ending balance sheet on here once we make all of these. So I have this, I have per QBO, and then I have a difference. So that means something's wrong with this work paper, and I need to see this compared to QBO, what's off, and fix it. Is it the fact that I just haven't done these journal entries yet? Is it what? Okay. So that we can figure all of that nice, fun stuff out and make it so at the end of the day, this amount should equal that and our difference be 0. Big old fat 0, right? So that's what we want in things. And that is accrued expenses. Now, let's move on to payroll liabilities and sales tax payable. So what we have with, you saw in my accrued expenses, there's all of that's kind of raveled in together. Because we do have also these liabilities. We withheld amounts like the federal taxes, FICA, maybe, health insurance withholdings, all of this sort of stuff. And then we need to pay it, right? So when we are doing that, we want to make sure that everything we're putting in is a liability actually gets paid. And best ways to do that is to, on the taxes side, make sure your payments are getting recorded properly, the returns are being done properly. If you're using a payroll provider that takes out taxes at the time of the payroll run, you don't have to worry about this stuff, okay? It's then on like health insurance and those other deductions that you probably need to worry about. Health insurance is probably one of the most underlooked areas to in month end and just reporting and all of that, because the health insurance invoices can be so difficult, especially the bigger the number of employees you have, because you're tracking what the withholding is and then making sure that the bill is accurate, okay? And when you have turnover employees, there's different adjustments that are made. There's always these changes that are happening. But usually I end up deferring to, okay, they got what those changes are. They're making those adjustments. That's great. I need to just make the adjustments in QBO. But if you are making like the same dollar value adjustment every month, and it's like going in the wrong direction every month, like you're having to add more to your expenses every time, then you want to drill down and make sure that all of your withholdings within your payroll provider are correct and that the bill matches up with that. And I've saved clients thousands of dollars by doing this. Just because I kept an eye on payroll liabilities and saw that things weren't getting paid all the way down. And I was just like, what is happening? Or whatever like it just wasn't clearing out right. So I would be like, what is really happening here? And that's when you dig in and really figure it out. But part of month end is you're watching it. You're watching to make sure that there's nothing crazy going on. Does this account make sense? Is it working properly? Same thing with sales tax payable. You want to make sure that it is getting submitted to the sales tax agency, right? If you're just collecting sales tax and it never goes anywhere, there's an issue, right? Maybe someone set something up improperly and you have this going on. Um, maybe people say that they're just collecting sales tax and not actually reporting it, which I've had clients do. They weren't clients for very long, but you know, you never know what is actually the case. So you want to compare to the sales tax return. You also want to be aware of the sales tax reporting versus your financial reporting. So are you reporting sales tax on the cash basis, but you're reporting your books on the accrual basis? Because then you just need your supporting documentation from QBO, you need to change that to like a cash basis report to look at and say, okay, does this tie up? Does it match and everything? So more things for you to consider while you're doing this. I have gotten to the point that I have done actual monthly reconciliations within these accounts so that it was easier for me to see that which one's cleared out. Because you know how you have like a month differential on when it's withheld and when you actually have to pay it. And if it's easy enough and consistent enough, I would just do a reconciliation to know that I'm clearing it out. And that's what I would do for support versus a work paper. Okay. So different things you can do there. Let's jump on over into our next session. And I'm just going to make sure that I don't have any questions out here yet. I think we're all looking good, guys. We're having a great day, all of that, right? Okay, so in session 5, so we've gone through these phases of month end, right? We have done our planning and figured out what our checklists are for the clients and what all are we going to do for the month, right? Then we've done our reconciliations, which is half of what we're going to do for the month, pretty much. And then we're doing our work papers. And that's the other part of what we're doing for the month. Then we get into this review and report stage. And basically, we're checking to make sure we're not missing anything and checking to make sure things all work out, right? So we're looking at the balance sheet and figuring out, we've done all this work to the balance sheet. Let's make sure everything is still working in here. Okay. So let me show you how I would do that. I'm going to flip this around a little bit. So I'm reviewing the balance sheet first, and then I'm going to show you how I tie out a balance sheet to a tax return. Because in the past, some people asked for that too as a part of this course, because it is something that can happen within month end or year end or whatever that we just actually need to tie it out. Okay. So when I'm looking at, I'm actually going to use our sample company file. And what I like to do for the balance sheet is I like to go over here, run the balance sheet, right? Then I like to compare it to the previous period and do the dollar change. Run the report, okay? Export to Excel. I'm just gonna put this wherever. I'll make this bigger for y'all, right? So here I have the balance sheet. And I'm looking at changes as of July 16th to the prior period and everything. I make notes off to the side like it's a work paper. I like to change the font to red for me. And then I'm going to go through things and look at this. So checking, I'm going to say, hey, this has been reconciled. If I'm reviewing someone else's work, this balance sheet view is great for you to go through and see the big picture of everything. If you are just yourself, you kind of know what you did and stuff. So if you're by yourself, I know I reconciled it and I know I did the reconciliations, so it's good. If it's someone else, I reconcile it, it's been reconciled, it's been in my task sheet, it's all been taken care of, right? But I want to look at that reconciliation report just to make sure that everything's taken care of. Like we don't have any unreconciled items listed there that don't make sense, you know, anything. This is where you find your review notes and start giving feedback to your staff on like, hey, you didn't actually do this reconciliation right. You need to look at this or that, all of that. Okay. So, but I would be going through here and I'd be like, oh, reconciled, accounts receivable. You remember, I like to do an AR aging for that. So I have the work paper. I could even say that I sent it off to the client and got it confirmed with them. Inventory asset, got a work paper, right? Undeposited funds. Actually, I didn't have that in my task sheet. So wait, what, you know, in that example, if I didn't have it there, it's all of a sudden popping up. So it wasn't actually my checklist. It's something that I now need to deal with. One, I need to add it to my checklist and give it some sort of task, like what do I need to do with it, right? And then do that work. So I know this is one example that I didn't quite give you guys in the work papers. So when we are looking at undeposited funds, I love just to run a report to figure out who owes what in the undeposited funds, just to have that supporting documentation. So for the way for me to do that is to run a report on one specific date, and then I group it by customer, okay? So when I do that, I have this report, export to Excel. Again, I'm just gonna save it. Gonna make this bigger for y'all so that the sum of these two, right? The 2062.52 should match what is on that balance sheet that I just did. So there you go. It does tie to QBO. It ties to my balance sheet that I exported, right? So I can write 2062.52 per QBO. And then what I want to do is I want to look at this to see, okay, what is the 1675.52? What is this 387? One way to do that is just to look at the bank deposit because it's a list out undeposited funds. And you can see that these two were, we have these two payments. Now, the payments were made on June 20th and they haven't been deposited yet. So, okay, that's a little weird, right? Deposited, oh wait, payment made 6/20, not deposited yet, right? You like, see, I need to have that red font. I'm crazy. So I have that in there. What I might do in research is let's look for that dollar amount. And I don't know if it'll show up in this here. I haven't messed with it that much before. Okay, so we have cool cars, we have undeposited funds. Do we have something in banking that just hasn't matched up? I don't see it. Ooh, excuse me. So in that instance, the question is, should that payment actually be in there, or do I need to avoid that payment? Because it's been a month, right? So, in knowing my example I was telling you, I've never had undeposited funds sitting in here, so this is a little strange, right? So let me come back in here, do this bank deposit, come to these payments, right? And I'm going to void these out. Okay, so I'm going to do that one. click this sucker, more, void, yes, because I have no proof that it was actually deposited. So I want to make sure that my accounts receivable are showing up right and all of that stuff. And QBO's wanting to take me on a tour. I don't want to do a tour. Okay, so voided in QBO, and you can make those notes on there. So that's kind of like how I would work through that. Now we want to make sure that undeposited funds are now added to the month-end checklist, just to say like review, create a work paper, the amount should be 0, something like that, right? I'll write here that it has a work paper. Then keep on working down the balance sheet. So we have the truck, it's an original cost. So we've added a truck here. This is why I really like to compare it to the prior period, because I could see in this column the dollar if there's been a change. So that triggers like, oh, something happened in the month that I need to worry about. So here, like, got documentation, I don't know, did something so you have the support for you. Let's see, work paper, this was reconciled. Let's see, work paper. So I, tied to tax returns, something like that. Loan payable, no change. Notes payable, no change. Opening balance equity should be 0. So move to retained earnings, which I would need to come in here, go in, oh, not there, come in, do the balance sheet, because there's not supposed to be anything in the opening balance equity. Oh, and these are all like inventory opening stuff or whatever. So what we can really do is just change all this to retained earnings, as long as we agree that it is like retained earnings and not, I don't know, like original cost, like if we bought it, it was actually cash, or something. Like, what's the other part of that transaction? If it's retained earnings, okay, fine. If it was a contribution from someone, that could be something else, So we would just want to move everything out because we want that opening balance to be 0, okay? So that's what I would do, coming through and comparing everything down on the balance sheet. And you can see here, this is where, one, I'd come back to my checklist. Let me pull up my checklist again. Now, it's not the same one as, it's a different company, right? But I'd have my staff or me complete it and sign off. And if I am the reviewer of my staff, then I'm reviewing and signing off on things on here. Okay. And I'm doing that during this balance sheet part. It helps me go through and make sure everything is taken care of and nothing's getting skipped in here. Because as you can see, we might miss an account. There might be a new account that I need to add into my checklist so that we take care of it. Make sure we take care of it next month and everything going forward. So that's going through everything. What I am going to pick up on next time is then also reviewing the P&L. So review is not quite done yet. Don't think that this is like the end of the review phase. It's just the balance sheet. We also review the P&L, but I have that put into next session to also include with we review and report and all the reporting options that we have over there. But remember, once we've tied down the balance sheet, right? This is where everything hides and different things can happen. Once we are really, really good with that, then it's a matter of just looking at the P&L and making sure that they're in the right places on the P&L. There's might be a rare instance where something needs to go back over the balance sheet, but most of the time it's just making sure everything's in the right place, categorized right, taken care of properly, everything so it just shows up on our reports better. So that's why I grouped those two in the next session. Now, let's go back and look at how do we tie these amounts, our balance sheet amounts, to a tax return, okay? So really cool thing about the tax return is that it has a balance sheet on it, but only some of them, okay? So here you can see the 1120, which is like a corporate return, 1065, which is a partnership, 990, which is a nonprofit, like I don't know if it's an informational return or something. Those all have balance sheets on the tax returns themselves. So it needs to be included so we have the information that we can compare back to QBO, okay? Now, Schedule Cs on a 1040 do not. They just have the P&L information. They might have some fixed asset information in there because it can be another like schedule within it, but it doesn't actually have the page for all the balance sheet information. So you might not get it from the return. And it's possible that the tax preparer did not really utilize it when they created their return. Again, I'm OCD. And I don't do taxes. So I can't say as to why or why not they would do that. I just need to see the whole picture. So I'm like, I need a balance sheet. But what I'm trying to say is you could request a balance sheet from your tax preparer or request the trial balance, which will have the balance sheet accounts on there. But they might not have it. Like, don't hold your breath on the Schedule C 1040 to get the balance sheet side of things. It just might not happen. Okay. And then you don't have anything to tie it to. And so you're just hoping the numbers you come up with are the right ones. See, that's the part that drives me crazy. I'm like, when I know so much stuff can hide on the balance sheet, what are we doing here? Okay. But let's look at it based off of the ones that do have it, okay? What I like to do is the same thing. I like to print, oh, that's the reviewing the balance sheet. Okay. This is where I just tied myself up a little backwards. Okay. Sample tax return. I have a sample tax return for you guys, and and if I haven't put it in the group yet, it will be in there. So let's look at this sample tax return, and then I am going to show you my sample balance sheet right next to it. Cool. I just need to make this pretty enough. Okay, so the 1120S, then just the regular 1120. Most of these are just kind of the same format, like the 1065 and stuff. If you're ever really bored, just look at these. I know when I was in school in my tax classes, I actually had to fill out these returns based off of like questions in class and stuff. So I had to do this stuff manually back then, just so that I understood where all this information comes from. But I know that's not a reality for everyone else. So let's talk about it a little bit. Okay. So on the first page, we're just talking about we have the income and we have deductions. As you can see, there's only a few that are actually listed on here as expenses. And then you have this area that just says other deductions. This is where we just have like a whole bunch of statements that the preparer will attach explaining what these other deductions are, right? In this instance, I have $72,000 in other deductions. There's a sheet somewhere that explains what those other deductions are. And if you only get like the 4 or 5 pages of the return and you have this big dollar amount, you want to request those schedules because it will lay it all out for you if you want to get to the point of doing the P&L side of things, right? And then you have your ordinary business loss income. Yay, cool. Second page is just like information. So I can see here that I'm cash basis, answering some questions, whatever, right? This example with the 1120S, I have a Schedule K. How does that our profits go to the shareholders? Blah blah blah. Like you don't need to necessarily know all of this stuff, but it does kind of pull out things that are might not be showing as income on the corporation side versus it's a deduction. So this charitable contribution, it's a deduction personally, but not for the business in this instance. So they want to report it and share it and separate it out differently here. Okay. Then even like non-deductible expenses. Remember your meals and entertainment, half of that's not going to be deductible. So what we really need to do is we need to understand that the P&L within QBO is not going to be the same P&L that's on the tax return because there are these differences of what is actually taxable and what isn't. But we have all that, right? It's all these the tax preparers pulling all this sort of stuff out, blah blah blah. Okay. So and then we have this 991, which I believe. Okay, so we have the 758, which is what I'm showing here, right? And then our ordinary business income loss 758, the adjustments that I made to it. So I have a negative 911. Let me see. And it will show up on one of the next pages. Okay. But the balance sheet, this is what we really care about, right? The balance sheet. I'm going to show you the 991 in a second. Trust me. But I want to get to this because we're going through these sheets one at a time. So this is the core. This is everything we want, right? Because the P&L, like, yeah, you can match that up, but we want the summary of all the historical transactions that of the business, right? I mean, retained earnings is the summary of all net income of the business up until this point. So I want the balance sheet. I want this, right? So looking at this, it is a very, very condensed view of things. So here we have what I have done in this is I've taken the balance sheet out of QBO, and then I have shown you where you find this number in the sample tax return. Okay, so you can find this on page 1, box F, but also, this is the one I care about, is page 4, line 1, column D. Okay, so that's the 13,878. Here it's 879. You'll always have like a dollar or two different stuff. They just don't put in pennies. Okay, then our assets, right? 4250, 4250, they zero each other out. Again, our total assets are the 13,878. Then the credit card is page 4, right? Line 18, column D. There's your 961 right there. Okay. And then the 12,918 is page 4, line 24D. So that when there is a difference between the two, what you usually want to do is create a journal entry to make it match the tax return. Okay. That's, again, I've talked about this. This is you signed off on the tax return saying that this is accurate and everything. So you really want that to be your source of information. If for some reason you're amending returns and all of this sort of stuff, then maybe you don't do those journal entries to match it, but most of the time you're going to make some sort of entry to get there. Okay. Now, let's go back to here. So this is what I was talking about. There's these reconciliations of things, right? So this 991 right here was that 991 here. So first we started out with, okay, on the tax return first page itself, I have net a loss of 758. All of the adjustments and everything coming back in here, I have a loss of 991, right? Now, how do I make 991 and the books match each other? So let me get back over to that P&L. Oh, and I have like 20 million things open. Sorry, guys. Okay, so I have here 1953, right? In 1953. So these Schedule M's, M1 and M2, they do that reconciliation to make sure that things are matching up and they flow right. Similar to what we do in all of our work papers, we want to make sure that the numbers match to what is in QBO, and everything, the math and everything is working correctly. Okay, so because there's a difference between QBO and the tax return, there's always going to be a difference. There's a reconciliation here of how do I get there. Cool. Okay. So I have that 1953. Then what stuff, what adjustments do I need to make out of there? So 415, which is that 50% of meals is the 415. And then long-term care is 547 right here. So all of that added there is 991. Okay. It gets me back to, okay, so we have distributions. The non-deductible expenses were the same thing. So it's like that 962. So I've added this long-term care and the meals. So it's like added, then fixed and stuff. Yeah, it's just weird, guys. It's just weird. But that's why we're not filling out the returns. We're just looking at the returns to make sure, everything looks right and stuff. So what we want to utilize is page 5 to make sure that our P&L is the same as what they're saying here. If it's not, then we kind of want to look at things, right? Now, then we have M2, which is the adjustment for the balance sheet, or basically the equity section of this. Okay. So I have a beginning balance here of the 17, blah, 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 right? And then it goes through all of these adjustments, all the things that it does. And then I have my balance at the end of the year, which is 12,917. And here is 12,917. Anyway, okay. So that's how it's pulling it in. So that 17,854, that's our beginning balance of retained earnings. Okay. So we're going from 17,854 to 12,917. It's showing you right here how that happens. So it's giving you that flow through again, just to make sure all the math is working across everything. So if those things didn't line up, then it would be like, okay, tax preparer, when they're doing the tax return, it's like, oh, okay, we need to go fix something, like something's off on stuff. But here it's like, it's our checks to make sure everything's in place. So what I will tell you too, and let me get back over to the P&L on this, is that I've also gone in here and come back up to the first page. So you could see what a real P&L looks like and how it matches to the first page of the return, or even if you had supporting schedules or something. So the 168,895 matches that right there. So again, page 1, box 1A. page 1, line 19. So I've put together all of the line 19s. They're all laid out. If you added all of those up, it would equal that 72,144, right? And then you have all these other amounts that, where do they go? So meals is one thing, how, taking care of meals on that. Owner wages, we have that page 1, box 7 right there. So I've laid that all out for you to see like how they match from one to the other. So very cool layout. And this is my dorkiness of, I basically love page 4 of these returns. That gives me my balance sheet. I'm a dork. So that is pretty much close to our session for today. I just want to see if there's any other questions in the meantime, or if there's any issues that people are having with their month-end processes. So let me close this out, close that. And how is everyone doing? Are we, we're recording this on the 16th, so hopefully we're getting close to finishing everything for the month for our clients. So I'm going to close that sucker. I'm going to close that sucker. And I'm going to go back over to QBO. So looking at this and looking at the balance sheet and seeing, where everything is, I'm like making sure, again, doing this comparative and the dollar change. That is my preferred method to look at this sucker on things. Oh, and this doesn't even, it's doing it, guys, did it by month. So now you really see that here are their differences between the month. Okay. I should have been aware of that. I apologize. But it doesn't really make a difference into anything I said or covered at all. Okay. So that's it. I don't see any questions coming in. I am clicking and making sure that I don't have any questions out there or any comments in the chat area. But that wraps it up for the balance sheet review and everything. And then, so the next session, what we'll do is we'll go through reviewing the P&L and going through all of that. And then I'm going to show you a ton of different reporting options. But remember, we don't necessarily have to report anything to our clients. It could just be as simple as emailing them and saying, hey, I'm done with month end. But this can be a value added thing that we provide to our clients. So it might be something you want to do. And so I'm going to show you all the different options that you have out there for reporting. So again, because of the issues from last week, we are going to have, like I pushed everything, one forward. So we have session 5 today, session 6 is on Thursday, and then also I said I was going to extend the open Q&A within our group another week, so you'll have that there too. So, yay, guys! I hope you're enjoying this. Okay, so that's it for today. I will see you guys on Thursday. Please ask questions in our Facebook group. If you do have any, I am here to help, and I want to make your month-end process fabulous. So have a great one, guys. Talk to you later.